when we made the decision to launch the bid, it was when the rumors about Credit Suisse had just came out. And we were going to launch the bid on a Monday, and we were too nervous because news came out that there was a potential deal with them and UBS.
We knew that we could turn around, we could turn around a bid in a couple of days.
We could tell that the kind of sea change had happened and people were getting very nervous about it. So we decided, well, there's enough nervous selling into the bid. We might as well just call it a day, go best and final, and really just incentivize everyone to vend in. I think on the topic of hostile takeover bids, look, I don't think it's about being hostile. I think when you're trying to move quickly and you see an opportunity, it's very difficult to then try and negotiate a complicated agreement with the board. And we ended up with actually something that was quite unique. And I remember pitching the idea to our lawyers, and they all told me they were pretty sure it was illegal.
G'day, money miners. The infamous Part B that you've all been waiting for the Wyloo chat is here with Luca Giacovazzi and Turco. Now, it's not Pulp Fiction style. Go back and listen to Part A first. It is before Part B. It makes sense to listen to Part A first if you've just arrived at this Part B. So Part A, great chat, boys, about all the commodity outlooks with them, bit of a macro view, a lot on the nickel, the big nickel view they've got. They're long nickel. They're very bloody long nickel, Wyloo.
Yeah, it was awesome. Commodity breakdown, and of course, like Trav highlighted at the beginning of that first show.
Now to talk about the stuff I care about, mate. Deals.
Trav had to put the bloody handbrake on me before. I think I went a bit early in Part A trying to get into the deals. He's like...
There's a timesheet to follow, Matty.
Whoa, yeah. Where is that? You better show me one of these timesheets that I never follow.
So I think the deals, it's what I like talking about, but I get the feeling it's also what they like talking about. These guys have been super creative in their deal structuring in a way that I guess other entities can't do because they don't have the same flexibility and capital behind them to do what they do. But I also just think that they are super creative in what they've done, and we're going to talk about some of that deal creativity.
I think it's just not in the mandate for other investors that we've spoken with. They're just, say, long-only equity investors, but these guys have so much flexibility, and it's an investment banker's dream because we're talking all different types of deals, moving at pace. It's just super exciting.
Hostile, on market.
Yeah.
Yeah. Just
stuff you just don't see.
Unsolicited, wasn't it? They didn't like the use of the word hostile. But I guess if you as a listener want to know why they went for Mincor, why they went at $1.40, why they then went best and final.
How that Noront deal played out as well. Super fascinating.
This is the place to be. We get real inside the heads of what the Wyloo crew think.
I think we're lobbying these guys for Deal of the Year. What do you reckon?
What did we say there about paying $2.50 on mining bet?
What did we say? What did you say?
Isn't it? I think I said $2.50.
I think you did. Yeah.
Righto, boys.
Here we go.
Let's rip it. And look, before we do, we really appreciate Turks and Luca giving us the time because they're bloody busy men, and we really appreciated the opportunity, and hopefully repaid them in a good interview. So,
one more thing, guys. This great conversation with Wyloo is brought to you by Anytime Exploration. Thank you very much, Anytime Exploration. All of your exploration needs from them.
Thanks a lot, guys.
Let's rip Part B, money miners. Here we go. Wyloo time.
Guys, there's an investment that you guys made that I found super, super fascinating. The deal with Hastings, the 150 million, which was an exchangeable note. I'm just excited to hear about the sort of thought process. You don't see exchangeable notes all that sort of often, but how did that all come about?
Yeah.
Sorry to cut you off there.
Sorry,
JD.
we took it.
I don't think we answered the question.
We derailed it. Sorry.
Why the exchangeable note?
So, how did it come about?
Yeah, I think the other thing, look, put the deal structure aside of how it came about and why we structured it that way. But what's really interesting about those businesses, so Hastings, probably the most advanced development project in, I would say, the world nearly, from a rare earth perspective, especially in WA. Fully permitted, broken ground, building the project.
Yeah, doing early works right now.
Yeah, so really interesting from that perspective because, how many times have investors underappreciated the time it takes to get a project permitted, funded, and start actually building? It's incredible. So we really liked Hastings from that perspective. And then you looked at Neo, and if you investigate a little bit into the rare earth space and you look at sintered magnets and how that market's playing out, we don't really make sintered magnets outside of China. And I think if you look at Neo, what Neo gives you or gives Hastings is it's a springboard to become a sintered magnet producer. Now, look, they've announced the sintered magnet plant that they're building in Estonia, which is great. It'll be the first, I would say, non-China sintered magnet plant. And yeah, I think with Hastings, if they're able to eventually one day bring those two businesses together, you've got a full supply chain where you've got all the way to an actual magnet. And I think what's most interesting about that is you no longer think of yourself as a mining company. And I think we're all having to think like that. We're all having to think of ourselves more as an industrials business. We're no longer just mining companies. But particularly so in the case of Hastings and Neo, where you're producing a magnet, and because you've got a mine with 30 years of life and a facility that can make magnets, you can genuinely go to a VW or a Mercedes and say to them, guys, we can supply you this magnet, this spec for the next 10 years for that specific car. And right now, nobody can do that. Right now, there's just a bit of a mad rush between everybody trying to not only secure the commodities, but secure how they process the commodity and how they actually make an end product. It's all just like a chicken without a head. Everyone's just scrambling to try and lock things up. And I think that's a unique opportunity for Hastings, where it doesn't trade on an EV EBITDA multiple of 5 times because it's a mining company. It starts to trade on a 20 times PE multiple because all of a sudden it's an industrials business that's probably got very healthy margins because you've captured the downstream.
Noront?
I think so, yeah. Noront feels like the right place to start. And because, Joel, you came into the business right around the corner. There's a bit of history with Noront and yourself. You and I both previously worked in the same team at Macquarie, not at the same time. But I hear that Rachel Hobbs, who may or may not listen to this, I'm not sure.
Shout out Rachel Hobbs if you're listening.
So she delivered her intern project to you, Joel, and pitched Noront when it had like a $40 million market cap.
Yeah.
So I think what happened is you came to Wyloo and then took Rachel's idea.
Took her ideas.
Straight to Luca.
Rachel, he told me it was all his idea.
Just saying. She texted me and she said, "Thief."
So shout out Rachel. Great foresight there.
Yeah.
Well done. But let's talk about that deal, because that was this was the first indication that I think WA in the world had to see the type of deal maker that Wyloo would become. It was ultimately a hostile deal. There are a whole bunch of components to it, but I'm kind of keen to get like your internal thinking on how the dynamics are unfolding in real time as we sort of step through it. I mean, the initial position was picked up from RCF in December 2020. It was 23% equivalent plus some convertibles that would exchange for about a 37% stake, and then by May 2021. Wyloo makes a 31.5% takeover offer for the company. So what's the rationale at that point in time, and kind of how much thinking had gone into the initial bid there?
Well, I can't claim much credit because you said the bid was launched in May and I joined in April. So the identification of it as an attractive investment took place. So I didn't actually steal Rachel's idea. Sorry, Rach. So I'll have to get Luca to give you the background on the initial investment.
Look, I think at the time, as I mentioned, we liked Australian nickel, and then we started looking more globally, went to Canada, did what every banker does, screened for the best projects. Eagle's Nest, came up at the top, good jurisdiction, and then just started to understand the story a bit more, and really fell in love with the Ring of Fire, which not a lot of West Australians know the story of Ring of Fire. It isn't just an incredible mineral basin, a greenstone belt that hasn't had that much exploration, and when people were exploring there, they were making discovery, which is what's amazing. So I can't remember the exact year. I think it was around 2008. They were out looking for kimberlite pipes. There's the old Victor mine just couple of 100 kilometers, not just down the road, a couple of 100 kilometers to the east. So they were out looking for more of these kimberlite pipes and discovered Eagle's Nest. And then shortly after that, there was a big staking rush that happened there. Had a whole bunch of juniors. I remember reading a story. I think there were something like 100 junior mining companies with claims on the Ring of Fire. And then they made very significant chrome discoveries and then also some VMS discoveries. And fast forward a couple of years, it went through a process of consolidation where 2 or 3 main companies emerged. They consolidated the region. One of the main ones was Cliffs and Noront. Cliffs, after a couple of years, became frustrated with Canadian permitting, which can be frustrating, and then eventually sold the project to Noront, and then Noront bought one more company called McFolds and basically consolidated the whole ring. So when we looked at it and we were thinking about opportunities for the family, we were really looking for things that would move the dial, and Ring of Fire was one of them. If you get it right and you get it developed, there's more than one project to develop there, and you can really create a mineral basin and a large mining company out of it, and that's what attracted us to it initially. And then as we kind of got more and more into it, really liked what they were doing from a First Nation proponency perspective. Was quite unique in Canada, and we thought this is the moment, this is the setup and the structure that will finally bring this to fruition. So really started to get behind the company, and then a couple of weeks in, BHP turned up, and then the rest is history.
Totally. And I mean, so Noront, they adopted a poison pill provision to block the initial bid, and I think this poison pill provision would be something that's pretty unfamiliar to the Australian listener. But can you just explain that tactically and why it's an element of M&A in Canada, and what did it mean for your bid?
I think the poison pill makes it sound like something very
nefarious.
hostile.
It's actually a great name though.
It is just part of Canadian M&A, and it's usually adopted by boards when there's an unsolicited bid, which was the case with us. We made the bid on market, and they usually adopt it when there's more than one bidder, and it's basically to prevent groups from creeping, because they've got very different creep rules to Australia. So it makes it sound like it was something very hostile, but it's really just when they assemble a committee to look at a deal, it's probably the first thing on the checklist that a banker puts in front of you and says you need to adopt a poison pill and then go through the process. So I don't know, Tex, if you want to...
Yeah, no, look, and the way it effectively works is that if you seek to acquire, or if you acquire a share other than via your takeover offer, the company has the ability to issue, I can't remember what the ratio is, but a bunch of other shares to dilute you a lot. So, it's effectively ensuring that you cannot buy shares on the market after you've made an intention to make a takeover offer.
Yeah.
So, it sounds very nefarious, but it's M&A defense 101 on the TSX.
Totally. So, as you said, BHP turn up, and the Noront board, they recommend the BHP's offer. This one's at 55 cents, and things get a bit murky in the media about this time. So it'd be good to see if you guys can set the record straight on a few of these points. So, I mean, in the media, there were reports that Wyloo said you could make a higher counteroffer, but it hasn't been able to get access to due diligence. Noront was saying that they're happy to provide DD to Wyloo, but Wyloo won't sign a CEA, and it was all relating to a standstill provision. Can you just elaborate on what the whole dilemma was about in relation to the standstill and why it mattered?
Throw this hot potato.
Turco. Yep. Look, that's well done, Trav. That's quite
well
accurate.
Researched.
Very well researched. So look, you're right. We look at takeover offers like this. Takeover battles play out in the press, and sometimes it looks uglier than it actually is. I think this one got a bit spicy because, as you said, we said that we'd be willing to make a higher offer, but we needed access to due diligence. Noront had already an agreement in place with BHP and wouldn't grant us that due diligence unless we signed a CA, and the CA had to be on the same terms BHP had agreed to, and that included a standstill clause. Now, it's one thing to sign a standstill clause when you've got a board recommended offer, but for us, we were making an unsolicited takeover offer, i.e. not a board-supported offer, something that went directly to shareholders, and we wanted to reserve the optionality to go directly to shareholders. So a standstill clause would have prevented us from acquiring shares any other way other than via a board-supported plan of arrangement, which is eventually where we ended up. But we always wanted to maintain the optionality that, hey, we'll go straight to shareholders here. We won't necessarily come via the board via a board recommended offer. So, we're in the business of keeping as many options up our sleeve as possible. And so that was something that we weren't willing to compromise on.
And ultimately, BHP provides consent and a waiver to enable a CA on similar terms without the standstill provision. And Wyloo gets access to DD. at this point, are you satisfied with everything in the data room, or does it feel like certain items are being withheld, or are you now on friendly terms with Noront, or is it still a little bit dicey?
Yeah. No, it's certainly not. I mean, you feel for the target in these situations because they're like caught in the crosshairs, basically. But from that point, it just became a value discussion internally, and then obviously we had the competitive element to it. But it wasn't. I don't think we ever felt like it was a secret cabinet of files that we didn't have access to or anything like that.
Yeah. So I think it'd just be great to get yourselves to tell the rest of the story, right? Because it involves a 70-cent offer and then a 75-cent offer, and then I'd love to hear it in your words what actually happened here.
Yeah, I might have first go.
Yeah. It's stretching my memory now, actually.
Yeah, it does actually stretch my memory as well. Look, I think when the takeover bid was happening, the one thing we always had an advantage over BHP was that we had bought that 40% stake for so cheap. So when it came to a value proposition, whatever price we were paying on an overall basis was always materially less than what BHP would have to pay to match us. And I think as we were going through it, it was quite difficult because we always knew, as much as we were in a strong position, that we were coming up against the world's biggest mining company who have very deep pockets and generally win takeover situations. So we had to get quite creative with how we structured our bid and how we presented ourselves, I guess, to shareholders. So as much as we had this kind of a cost advantage, we also had to be very creative about how we took them on. And we ended up with actually something that was quite unique. And I remember pitching the idea to our lawyers, and they all told me they were pretty sure it was illegal. But
never been done before.
It's never been done before. But we found a way through it.
Not sure it's legal. Exactly.
We ended up finding a pathway through it, and essentially what we ended up offering shareholders was that they could choose to stay with the business, or they could choose to take the cash, and it was up to them. And the way we set it up was that if enough chose to stay, we were very happy to keep it listed. But if enough wanted the cash, then we would just delist it and take it private. And that's obviously where we ended up. We ended up privatizing it. But I think it was such a nice way to play the takeover bid because it was something we knew that BHP could never offer shareholders. They could never offer shareholders, oh, you could come along for the ride if you like the story. They always could only offer a cash deal.
Yep. And
that was very difficult for them to, unless we eventually sold into their bid, it was very difficult for them to get 100% of the asset. So it was interesting and a lot of fun. It took a lot of months, and there was a lot of creative thinking on our side to try and outcompete BHP and figure out ways that we could offer something to shareholders that they couldn't.
Talk us through the rationale on the last, counter offer that came in, particularly the pricing. Your last offer was $1.10 a share, which was 57% higher than the previous BHP bid. Why that?
Yeah, I guess what you don't see from the outside is the discussions we were having with BHP. So we were quite open in all of our press releases. I think we mentioned that we were in negotiations with them. And we gave it a good crack. I think we spent about 2 months trying to reach an agreement with BHP, and we got really close. And to give them a lot of credit, they were very good to work with, and we really tried to find a middle ground that would work for both companies, which was great. But then it got to a point where I think we were 9 months into the bid, and we had said to them, look, we have to call it a day at some point, and we'll put our best price forward. And that's what we did. We came out with a price that we were very comfortable with, and it was on them to either match it or beat it, and they obviously walked away. So we did enough to scare them off, which was good.
Yeah, and it was that innovative structuring piece that you talked to, which has been a common theme throughout the subsequent deals that we've definitely observed in the market. One I'm kind of keen to talk about, sticking with the nickel thematic though, is actually one where you had a brief active role, but it's played into a bit of a theme in what the future holds for Wyloo, and that's when Wyloo kind of wedged themselves into Western areas as IGO was taking over that company. So you see you've got you already have an interest in Western areas. The takeover offer comes and you increase your interest. What's the thinking internally at this point? You're paying higher than the cash takeover offer for your shares. to cause a bit of havoc? And like, what's the real plan here?
Probably goes back to my earlier point about optionality, trying to keep options available. I mean, we were already in a good financial position on the basis of our investment when the bid came through. We obviously had and have and continue to have aspirations to be a serious player in the WA nickel market, and it wasn't trying to mess with Argio's plans. It was just a case of, this looks like it might get away from us unless we move quickly. And as I said earlier, I think one of our strengths is our ability to move very quickly. So we're able to mobilise the capital quickly, able to build some leverage that way. And then I guess the option, as I said, the optionality then became, well, do we launch a competing offer, or do we speak to Argio? And we probably the external, like the optics of it, weren't helped by the fact that we'd just been in this bidding war with BHP, and so everyone's like, here they come, here we go again. But in this occasion, Argio is a company I think that we admire greatly and have followed for a long time.
The rationale was more to form an alliance with Argio than it was to actually acquire.
Well, I guess that was we had, by putting ourselves in that position, we had a strong option to do either, to either counter bid or to go to Argio. And ultimately, we had the conversation with them, and we thought this is a great opportunity to bring together, a great, we've had a view that West Australia can be a powerhouse in the battery supply chain, and we knew that they had done a lot of work on their downstream processing, and so why don't we work together on this? And then ultimately that's where the situation was resolved.
So speaking of doing illegal things in deals, you mentioned the first one.
Hey, I never said that.
I always the advice from the lawyer, it's illegal. I always learned in M&A that you're not allowed to get a collateral benefit out of these transactions, and so how was the for the listeners that aren't familiar, Wyloo ended up selling into the IGO offer, but there was what appeared to be a sort of a collateral benefit. There was an agreement to agree to establish a joint venture for downstream processing. So, talk us through that angle of is it a collateral benefit or not? Did you break the law or not here?
I think
did not break the law.
They're in this room right now. In the 92% of it.
I think what's important there, Trav, is to Joel's point, initially going into it, we were considering a competing bid. And again, I think that comes back to the piece around, we just know how scarce nickel sulfide ore bodies are, and we really did consider making a bid for Western areas. And then I guess after we'd done our work, we decided not to proceed. And then on the piece around the downstream alliance, I actually think from the outside it might have looked like that, but it was a very different, the way it came about was a very different story. So essentially what had happened was Argio reached out to us to have a conversation to try and get our support. And then we got talking about nickel. And I think something that we recognized quite quickly is if you want to talk about going downstream, you really need to start to think about scale, and you need the industry to kind of work together. And we had said this to the guys to say, look, you're never going to be able to do this on your own. You're never going to have sufficient feed to do it on your own. You really need a partner with somebody. And then that's where the conversation ended up heading, and we formed the alliance. But when you talk about a collateral benefit, there's no value in it. It was really just coming together to say, let's work together to look at something. But there was no value in it for us on the day we struck it. So, I think important just to know that.
Value an empty box.
Yeah, exactly. It was just, I think it's actually something that I think really should be celebrated a bit more across the industry. I think if you can work together as industry, you can really achieve great things. And as companies, we tend to be very isolated and siloed, and just think about what's best for us and how we improve value for our own company. But you need to sometimes, I think industry needs to come together, especially when we're talking about downstream.
Yeah. I think one of the real challenges of there's a lot of talk at the moment about can Australia be a supplier of battery materials, and it just requires such scale. And the mining sector is so used to being competitive. We compete for assets, we compete for people. But it does require a bit of a change of perspective, because, with the exception of BHP and probably one or two other the largest mining companies, it's very, very hard to achieve the scale that you need to economically move into downstream processing without partnering with at least one other producer. So, it's I think that we are often viewed as being a hostile bidder in things, but I think we can, as I said, we're keep our options available and collaborative when we need to be collaborative.
Let's talk more about that hostile approach because
Stop using such harsh words.
Hostile, illegal, Jesus. Pretty bad words.
Unsolicited.
So I mean, talking more about that unsolicited approach. We're having this discussion in the offices of Mincor because Wyloo successfully completed its acquisition of Mincor, and this is a pretty interesting one because the entire time I've been following capital markets, never do I literally can't think of an example where I've seen a hostile on market acquisition get unanimously recommended by the board and then it completes at that price without having to change the price at all. So just like, that one point in and of itself is pretty insane. Of course, there's a whole bunch of factors.
Cheers, BHP.
That's right.
A little
Thank you.
gift they go. We'll get into that.
Yeah.
I'll let Turco go through kind of the history and how we got there. But I think on the topic of hostile takeover bids, look, I don't think it's about being hostile. I think when you're trying to move quickly and you see an opportunity, it's very difficult to then try and negotiate a complicated agreement with the board.
Yeah.
So our view has always been it's actually shareholders who deserve to make the decision of whether or not they want to sell. And
the competitive advantage of Wyloo is being nimble in a lot of ways.
We're nimble, and look, I think you can't do it all the time. You gotta remember you go into these situations without due diligence. So it is complicated. You've got to have a good view on the asset, and lucky we've had a lot of history with Mincor, so we understand the assets really well. But I think for me, it's not I wouldn't characterize it as a hostile takeover bid. It's a bid that just went straight to shareholders. So we went to shareholders before we went to the board. It doesn't mean that you don't have a friendly interaction with the board. Both on the Noront deal and on Mincor, we actually had very good engagement with both boards. And on the Mincor situation, it obviously led to a positive recommendation. So
There was a bloody big buy order sitting on my ComSec up there for a while at $1.40.
It was. Yeah.
Was it always planned to be hostile? Oh, not hostile, or done that way, unsolicited.
Unsolicited. It was. There was a lot of discussion around on market versus off market, but I think that we understood that we were at a moment in time that we could offer a price that we were willing to own the company at, and that trying to go through a scheme of arrangement, an NBIO and a letter, and by the time that plays out, maybe that opportunity isn't there anymore. Whereas that we knew that we could turn around, we could turn around a bid in a couple of days, and that's what we did. So it was just a matter of capitalising on the opportunity, bidding at a price at which we were comfortable to own the whole business. But also acknowledging the risks of an on-market takeover offer, being that you might get nothing, or you might get another 10%, and then, or maybe you'll get to 40, maybe you get to 50%, maybe you won't. So we were comfortable with those risks. I guess we viewed our position. We were at 19.9. We thought, hey, at this price, we'd be happy to own more, or we'd be happy to own all of it. So,
and you avoid the creep rules if you have an on-market takeover.
That's right.
Offer.
Yeah.
So you pick up a few extra percent.
Yep.
Worst case scenario, and you're happy to pay $1.40 for them.
That's right. Yes. Yeah, you're right. At that point, we said, well, geez, we'd like to own more, but we're at 19.9. We can either acquire 3% every 6 months, but who knows what price we'll be paying for it. But at this price, we're happy to own the whole business. And if we don't get the whole business, we get another 20% of it, then that's a good outcome as well. But you have to be willing to accept the risk that, you're going to have to buy it. If everyone accepts on day one, you have the money ready to pay everybody.
So what about, but just so before BHP gave you the little Christmas present, or it wasn't at Christmas, or was it at Christmas? It was bloody a good Christmas present. So they shot up to about $1.65.
Yeah.
What were you thinking then? What was the mindset of it?
Have we made a
Because the
terrible
market
mistake?
we cooked it.
the market's
This is a bad
thinking,
idea.
right, there's going to be a bidding war. It's all going to be action
For sure.
packed.
Yeah. Look,
got
I
let down a
remember,
bit.
I had the dubious honour of having to phone the broker to phone the order through and reading out this script. And I'm like, have I read that number right? And by the time I'd finished that conversation, there was already bids ahead of us in the market. Because people had seen the ASX announcement and reacted straight away.
Yeah, because their numbers were shorter than yours.
Yeah.
It's a great arb there.
Yeah, that's right. And, look, I think that enough people understand the dynamics of the nickel market in WA and they understood that, BHP are a customer, IGO were also a shareholder. Hey, this looks like this isn't the first and last bid. As it turned out, it was. But I think for a while there, everyone was expecting this is going to go, but it's going to go at a much higher price.
So then fast forward to the arsenic issue from Cassini, which then pretty much got you the $1.40. Were you aware of that high arsenic in Cassini?
I think maybe before we get to arsenic, there's another interesting dynamic that was playing out at the time. When we made the decision to launch the bid, it was when the rumours about Credit Suisse had just came out.
Yeah, that's right.
And we were going to launch the bid on a Monday, and we were too nervous because news came out that there was a potentially a deal with them and UBS. So we actually paused. We didn't launch on Monday. Then we came out on the Tuesday. And that was literally, I think, the 52-week low on Mincor.
Yeah.
And then coming out of it, we launched the bid, and literally 2 or 3 days later, the market shook off Credit Suisse and everything was rosy again.
Yeah.
And I think when the share price went up to $1.65, I think people realised that market just had short-term memory loss, traded all the way down and then realised the long-term value again. A lot of rumours about us being opportunistic and, this doesn't reflect full value. Will there be a bidding war? So there was all of that playing out as well. But I think it just speaks to how lucky we are as a group that a silly thing like the Credit Suisse situation, which isn't silly, but how it affected a company like Mincor, which is not correlated to anything with Credit Suisse, that we could move that quickly to be able to take advantage of that situation.
Yeah.
So.
Yeah. I remember sitting, the funny thing about raids, whether they are financial or otherwise, is they always seem to happen pre-dawn. And I remember, you have to get in there before the market opens and driving into work and as the sun's rising, listening to the reports and the news about the Credit Suisse situation. And I remember speaking to Luca and saying, we're about to launch a $750 million acquisition on the first day of the financial crisis.
Yeah.
So we just kind of cooled our heels for a day.
And that was just after, was it the Silicon Valley Bank as well, was before that? And there was, everyone thought it was a bit of a pending banking crisis.
Yeah.
It didn't turn out that way.
No, it didn't.
Love to get into that arsenic now.
Yep.
Was there ever the sort of serious thinking that you'd pull the bid if you can get into that at all because of those issues? Obviously, it's not new having arsenic in Kambalda assets.
Maybe that's the first point. Obviously, is it known that the Kambalda nickel assets have arsenic in them? Yes.
And especially that Widjamutha region.
That's right. It's known that it's potty. It's known that there are arsenic. It's known that it's a blended product that you'd end up selling. Did we know about this specific upcoming issue? No, we didn't. In fact, I guess the whole situation was quite fortuitous as far as we're concerned because, look, I don't know the inner workings at BHP, but I assume that it was ordinary course of business to say, there's discussions going on around what is and isn't acceptable. The difference is that when you're in receipt of a takeover offer, which Mincor was at the time, you can no longer rely upon those carve-outs to the continuous disclosure obligation. So anything that was seen as commercially sensitive had to be immediately disclosed. And so rather than being able to be resolved over the coming day or two, it was immediately disclosed. And then obviously that was the catalyst for, we hadn't picked up a share until that announcement was made. And then all of a sudden our order got hit that same day. I remember waking up and checking my ASX announcements and I was like, oh, what's this? I thought, oh, we might be on today. And then I think it was sort of mid-morning that the order got hit for the first time.
I didn't know that you hadn't bought a share yet.
Yeah.
Well, I didn't know about the ARB bit. But then the big play after that was the best and final.
Talk us through that, right?
Yeah.
Because
that's the most interesting part of it.
Yeah. You normally reserve the optionality to go best and final until later. So you've gone best and final on your first offer. What's the thinking here?
But that's after the arsenic thing.
Exactly.
Yeah. I think that we appreciated that we were in our position was stronger after the announcement of the arsenic issue. As for ultimately probably a masterstroke, the best and final.
Look, I think we didn't have any information that the market didn't have. So we didn't fully really understand the arsenic story. We were sitting there going, look, hopefully it's something short term and not something that has a long term impact on Mincor. So we were still comfortable with our position. We can't control what the media wants to write up on, whether we want to pull the bid or not. Unfortunately, the media is going to speculate on what we might do. But we were sitting there not really sure what the arsenic meant. And I think from a bid perspective, we could tell that the kind of sea change had happened and people were getting very nervous about it. So we decided, well, there's enough nervous selling into the bid. We might as well just call it a day, go best and final, and really just incentivize everyone to vend in, because at that point in time, there was still quite a lot of value arbs buying the stock just above the bid price, hoping that we might bump it. And we basically just wanted to say, well, the bump's not coming from us. If it's going to come from someone, it's going to come from another bid.
Yeah.
So the whole time we were just trying to target removing any kind of conditionality around the deal. Yeah. And we were, I'm not going to say we didn't time it deliberately. We did. We timed it the day before the target statement came out. And I think it made it very difficult for the board to try and renegotiate a deal with us, because there was no deal to be renegotiated at that point.
Yeah,
you go best and final, and then the stock starts trading at 140 flat.
Yeah,
and it's cornered the board.
Yeah, that's right. I mean, well, you'd know this from your time in banking, Trav. The takeover handbooks, you give them to a board, and the boards know that the best tool that they have to elicit a bid is their recommendation. So you say, as the target board, you can say, hey, you bump the bid, we'll recommend it. That's the typical play. So by going best and final, you remove that. You remove that. And yes, was it deliberate timing? It was deliberate timing. Were we fortunate that the arsenic announcement had put us in a strong position at that point in time? It had. I think the way that it played out in the media was that best and final, there was all the articles being written like, oh, they want to pull the bid, they want to get out of this, and then us going best and final probably made some people think like, oh, if they can't get out of it, at least the best they can do is cap it here. But for us, it was just a tactic to I guess remove that usual conversation of a bump for a recommendation.
And yeah, again, we didn't have full information on the arsenic issue, so we weren't really sure what it meant for the company. So was it our best and final? Yeah, it was. Yeah. That was the best price we were ever going to pay. So instead of leaving it open, we decided just to call it a day. And I think it was important that during the bid, you kind of saw it, there was continuous momentum and pressure. And that's what kind of got us through. And by the time we called it best and final, the target statement was due a day or two later. We had already hit 51%, and your chances of a counter bid coming in are very small at that point. So from a board perspective, they really didn't have much of a choice but to recommend the offer.
Correctly forecasted by a money of mine, I recall.
That was our first episode.
Yeah. I was driving home. I listened to it on the drive home, and Trav, you were like, oh, this reckons they're going to accept. Driving home thinking, geez, that'd be nice. It'd be nice if they accept. And I wake up the next morning, I was like, well, he's called it. So,
Getting further into the nitty gritty, I think it might only be investment bankers still listening to this podcast, but the sort of deal carries on and it gets extended, and then up until, from memory, the 5th of July is the final day. And there was days where we were following it. I remember you guys were getting, into the high 70s, into the low 80s. And we were like, there's a week left, there's a few days left. And it sort of ticked over around the financial year, into the new financial year. How confident were you guys getting to that 90% compulsory mark? Were there some nervous conversations or?
Because it wasn't a bloody convincing, it was just
the data spare. I think we just got over. No, look, you always get into that.
There was overwhelming support.
It's overwhelmingly
but how much did that, end of financial year play the new quarter?
Look,
I think that with the indexes and everything.
I think that one's the financial year one is probably not so much index funds as retail shareholders who are, some of them have been shareholders for a long time and might be sitting on a large capital gain, probably not as large as it had been 6 months prior, but thought, I'd rather realise that capital gain the next financial year.
Yeah.
So look, there was some thought given to that. If we extend the bid, it makes it just helps some retail shareholders defer that capital gain to the next financial year. So there was that. The index fund element of it was an unusual one because, as you pointed out, an on-market takeover offers, they're quite unusual. Mincor is an ASX 300 company, is therefore owned by various index funds that are providing exposure to ASX 300 resources or whatever it may be. So as long as it is still listed, it's still in the ASX 300, and therefore those index funds have to own shares in Mincor. But the fact that those index funds own shares in Mincor was preventing it from reaching the compulsory acquisition threshold and therefore being delisted. So it was this weird chicken and egg situation we found ourselves in.
One of the rumours I think I read on Twitter, and great source of information, Twitter, we know it's all true.
Definitely.
Was
Word on the decline.
yeah,
Where did they climb?
was that hidden within the shareholders not accepting was, BHP was sitting there and they were they had a strategic interest to do it because if there was any future decision that would require shareholder approval, one that would result in Wyloo having some benefit, then you wouldn't be able to vote your own shares, and they'd have outsized impact to block something strategic there. Was there any merit to that theory, or was that all just conjecture?
Not that we could see on the registers that we had, but the issue is more around S&P and that ASX 300 index, and we had to work quite hard with S&P to eventually remove Mincor, and I think they removed it 3 days before
Maybe
the bid.
two.
And that really triggered a flurry of selling from the funds. So
Yeah. But look, to your question specifically, all the register analysis that we received didn't suggest that, but would have been a good play.
On that theme of sort of zooming out and having the broader sort of discussion, do you guys ever feel that the debate is a bit too centered around electric vehicles, and that's only one component?
Yeah.
But beyond what you guys look at, do you just think sometimes the debate is a bit too centered around electric vehicles?
it comes down to that kind of mega trend and looking at the decarbonisation. So you don't need to look far. Just open up your news today and you can see the heat waves happening in Europe and the climate is changing. And there's a need to go after all these technologies. So I think, look, we're definitely very focused on the EV space, but we're a small cog in a bigger machine.
Yeah.
And I think we have done stuff outside of that. When we think about rare earths, I actually think wind turbines is a bigger market for rare earths than cars.
Yeah.
So, we're not fixated just on EVs and batteries. We do think about it more broadly.
And I remember seeing one of the many research charts that talked about the commodities that stand to benefit the most from the themes of like electrification of transport, but also from like energy storage. And I think it was lithium, nickel, and copper. And like lithium had I think the one thing about copper that was quite, I beg your pardon, about nickel that was quite interesting is that, look, it's obviously majority EV driven, but there's also a large component of it that's electrification and energy storage more generally. I think that EVs dominate the conversation around the activity that we're doing by virtue of being a little bit sexier to talk about, but also, it just happens the same way that we kind of, I wouldn't say fell into nickel, but it became the logical thing to invest in because we had existing legacy investments in nickel, and it became the thing that we were active in, and like one opportunity begets another opportunity. And so it just so happens that NMC batteries are predominantly used in EVs, and therefore that seems to occupy a lot of the conversation.
I think it also just has to do with how big that disruption is. Like in our lifetimes, we've probably seen it. We've probably seen it in our lifetimes. I should take that back. But when I think about like the music industry started with CDs, and we used to go buy them, and then that fundamentally shifted to a very different model. EVs is kind of like that in the car world. It's a completely big shift in how you manufacture a car and what it means. So from a disruption perspective, it's massive, and that market's very big. We produce somewhere between 80 and 100 million cars a year. You can appreciate how big that disruption is to that industry. And then I think the biggest thing that's driving that as well is you've got governments mandating the change. It's no longer just, it'll happen when it happens. Yeah. It's now actually, this is a mandated change. So I think just the demand for the metals associated with that is so big. That's why everyone fixates on it.
God, mate, I reckon a good investment you shouldn't forget is cement. You seen how much bloody concrete goes into these wind turbines?
That's true.
Have a look at Borrell, maybe.
I reckon that one might have played out.
What do you reckon, boys?
Yeah, I mean, this has been like fascinating. I think it'd be great to leave the money miners just with like a snippet of in what ways do you think the Australian public will see Wyloo's activity in the future?
I think that is one that we always get asked, and because we're a private company, you don't get to see all the things that we're doing. I think you'll definitely see it in new mines and new investments that we make.
Yeah.
So hopefully we'll definitely keep the public aware of what we're doing in the PCAM space, and hopefully we have some success in Cambodia as well, which will be great. And then obviously we want to bring our projects online in Canada. We always get we've had endless amounts of investment bankers come to us and say, why don't you guys IPO the business? It's obviously an interesting proposition because there isn't a lot of nickel exposure that you can get on the TSX or the ASX or the LME on the London Stock Exchange. So it's something, that we get pitched it all the time. We understand the kind of value proposition, but for us, the focus is purely on, at the moment, just on integrating this business. And then we'll see what the future holds for us.
Yeah, I think I would like to think that the same innovation that has been evident in our deal making will propagate through the entire organisation. We'll start to see it in our operations and both in mining and downstream. So we aim to be a true innovator in that supply chain, and I think you'll continue to see us being. I'd like to think in the future you'll see us Wyloo as a key player in that battery metal supply chain.
Are you putting your hat in the ring for Dealer of the Year at Diggers and Dealers? Can private
You said
companies
it, mate.
win it?
You said it.
What do you reckon you're paying? What do you reckon?
I reckon we
$2
might.
$50?
Who gives out the
you
awards?
reckon?
Mining used to give out the award, don't they?
Do they?
Yeah, I'm pretty sure. So
Yeah.
KP.
I think the first step's probably putting a submission in, so we better get
Hey,
around to
mate,
it.
you just flick us at 50, mate. I'll have a word to KB for you.
Thank
So,
you.
no problem,
Yeah.
mate.
We might have upset.
Nothing sus going on here, money miners.
We might have upset too many people to win deal of the year, I think. So.
No, don't worry, we know how you feel. Well, good. Mate, thank you very much for having us in here in this 92% of the room we're in.
Yeah,
Is
pleasure
it
to
at
have you.
92 at the moment? Is that what it is? Is that what it ended up?
92.7.
We stopped counting when we hit 90. So.
That's all right. And we really appreciate the privilege. And we're not going to disrespect you by even asking you, because everyone would interview you say, "Oh, you reckon you could get Twiggy for us as well?" So,
What do you reckon?
hey, we wouldn't say that. if he wanted to come on,
I'm sure
we'll see if we can
you'll
fit
have
him
a chance to meet him face to face one day, and then
We'll
you can ask
see
him.
Yeah.
See if we can fit him in. No worries. Thanks very much, guys.
Thanks,
Thanks a
guys.
heap.
Really
guys.
appreciate it.
Good to have you, boys.
Beautiful.
Thank you, guys.
Awesome.
Hootaroo.
Thank you very much.
Hootaroo.
Oh, what are you going to hit a ruin there?
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.